Hi, good evening, friends. Welcome back to my channel Infinite Trade. My name is Robin, and I hope you all remember me. So, it's been a very long time that I haven't recorded and posted any videos. I think it's been almost a year and a half, or maybe beyond that. So, finally, I've uh, come up with a new video. Okay, and I got few requests from some of my followers, my friends, and everybody was keen to know that what am I doing for the past so many months. So basically I was focusing completely on my own trading, uh, because one of the challenges was the market was constantly changing, the expiries were changing, the expiries were shifting, from a weekly to monthly and whatnot. The days were changing, so constant change in the market for the past 1.5 year. So that actually makes the price movement a little bit trickier for the initial few days, because you know the constant changes makes the market a little volatile. And India VIX has been trading on a very lower end, and so whenever the VIX trades very lower, there is always an opportunity of uh, the the market becoming volatile. So too many changes, and uh, within that, I was actually focusing on my trade to become a better trader, to make more profits. So initially, the earnings were always constant, and I had to scale up that. I had to scale up my capital, scale up my quantities, and finally, yes, it was a very good experience, and uh, also I have scaled up my capital and the profits that I was looking at per day, per week. Uh, that has also changed significantly. So I thought, since there was a lot of time that I've spent with the market, I should share my experiences. So, mm, like I said before, some of my friends, some of my followers, they requested me for videos, and I was confused, because when you don't do certain thing for a long time, obviously you tend to lose that uh, confidence, and also the uh, you know like making a video for me right now, it's not that easy like before. So anyways, I think I thought, let's not make videos in bits and pieces, but I thought I'll make something as a good learning, like a course, uh, not paid anymore. Like I was also not into it, taking money for the learning and all. Uh, but now I thought, let me share my complete experience of the last 1.5 year. Uh, so this particular video is not just going to be a single video. However, it is going to be a proper class. Okay. So I don't know how many videos will come, but at least 4 to 5 videos, and it would be of a longer duration. Like I said, I want to cover all the topics, and you know try and help you all to make a better trader. So let's not waste any more time and jump into the topics that I intend to cover within this class. So I've kept the name as Trading Masterclass, and these are some topics that I intend to cover during the duration of the course. So we will not cover all the topics in one go. I'm going to cover the first two topics, which is higher time frame to lower time frame analysis, Dow theory, identifying swings and corrections. So these two things I'm going to record in this particular video, and subsequently you will get more videos on the upcoming topics. Okay. And these things, by looking at it, I think you should be aware that these are the things which are more than enough for us to identify the price action of any particular script and trade in an optimal way. Okay, so let's begin the session. So, like I said, the first topic is going to be higher time frame to lower time frame analysis. So, you need to quickly understand why this analysis is important because see, the higher time frame gives you a more clearer picture. Uh, since this is an initial beginning of the class, I may not use the charts much. From the next video, everything will be chart based, but this is more of a discussion and more of explanation before we get into the charts. Okay, and for any sort of new traders, uh, this is not going to be very basic, but people who already have the trading knowledge will be, for them, it will be easier to understand. So, higher time frame to lower time frame analysis, like I said, that helps you in understanding the trend of the market. So, that's why it's very important. And, you know, I have an habit of predicting the next candle. Okay. So in that case, if there is some sort of a candle in the monthly chart, so I tend to predict what could be the next candle on a monthly chart, and my trades are based on that. So that is why I said that higher time frame to lower time frame analysis is pretty important. So first things first is with respect to the time frame. I would suggest you all to choose your best time frame. Okay. There are variety of traders. Some do intraday, some do swing trading. Swing tradings are of different types. Some follow hourly chart, 2 hourly chart. Some do on a daily chart, on a weekly chart. So there are different things. So you need to choose for yourself what is best for you. And if you're choosing a lower time frame for a swing trading, say hourly or 2 hourly, that's absolutely fine. In that case, I would always suggest you all to stick to that particular time frame, and once in a while you can uh, analyze the trend on a weekly or a monthly chart. Okay. And if you are a new trader, or if you are a trader who has spent quite some time but not making consistent profits, this is going to be a very important session uh, because what happens with a new trader and a trader who is not consistent? Okay, so what is the similarity is we tend to keep on changing our analysis, we tend to keep on changing our setup uh, because somehow the other way we don't find it profitable. So I hope everyone will agree to this point. So instead of doing that, what best you need to do is stick to a particular time frame. Okay. So what I do is, since I have spent some time, I do multiple analysis of different time frames. But since the class is focused on making you understand the market and trade accordingly, what I'm going to suggest you is stick to one particular time frame. So when I say one particular time frame, so for example, say you're analyzing it on a daily chart. So your complete analysis of the trend should be based on daily chart, and any smaller time frames that you use, that should be for your entry. But in my last 1.5 year experience, what I've noticed is, instead of going for a daily chart or a weekly chart or even a monthly chart, you can avoid all these three charts and consider your daily chart as a 1 hour chart. So basically, your analysis should be based on 1 hour time frame charts or maybe 2 hour, not beyond this. So you only focus either on 1 hour time frame or 2 hour time frame. Avoid daily chart, weekly and monthly. Okay. So if you avoid these things and you just focus say on 1 hour chart, your trend analysis, everything will be in place. And the other time frames that you look at, so for example, if you look at daily and weekly and monthly, what will happen is you'll start getting confusions. So instead of that, you can just think that there is no other chart or there is no other time frame that exists apart from an hourly chart. So the maximum time frame that you can go for is an hourly chart. Just for your practice and for your nominal analysis, once in a while, you can look at the weekly or a monthly chart. That should be fine. So this is my personal opinion. If you like it, you can definitely try it. Just follow the hourly chart and you will be good to go. And it is not just about following the chart. The subsequent topics that we are going to discuss will definitely help you to understand how the only one time frame can help you become a great intraday trader as well as a swing trader. So this is about the time frame, and for entries, obviously, we will be using the smaller time frames like 5 minutes and 15 minutes, and there will be a lot of other things involved. Like for intraday, we will look at the option chain, and we will also look at some candlestick patterns, and these things will definitely help us to take our better trades with a nominal stop loss and a very good targets. And the other thing is overall trend on a higher time frame may be different, and lower time frames may be different. uh, because on a higher time frame maybe Nifty is, like we say, it's always bullish, but on a lower time frame we definitely tend to see some correction, some dip, and those things are important for us. One more important thing with respect to time frame is we always have the biasness in our minds, right? uh, Many a times when the market is bullish, uh, there would be some set of people who would always look for an opportunity thinking that the market will give a dip. They will always look for a put trade, even in a bullish market. And because when the market is bullish, you definitely know that the market is going to move higher, but it will also give a dip. And sometimes, it happens that 2 or 3 days Nifty is moving continuously upside, and then you're waiting for a dip, and you tend to get biased, and you're always looking for an opportunity for a good put trade. So this biasness will always be there in our mind, but what is important here is a slight change. So on a higher time frame, uh, your mind should be biased, okay, regardless of whatever is happening. On a higher time frame you should always be biased, and on a lower time frame, say like an intraday time frame like 5 or 15 minutes, you should never be biased but try to trade the trend. So if I have to give you an example, say on a higher time frame, uh, there is a resistance here, okay, and there is a support here. The price has moved to this place. So now we have almost reached close to the resistance. Market is in a bull trend. But since we are at the resistance, here automatically you should be biased for a put trade. Okay. And say there is some space left here, and on a 5 minutes time frame, you're seeing that the market is moving higher. Obviously, it will be approaching the resistance. So on an intraday trade, why should I miss this rally? So if my intraday trade is suggesting me to go for a bullish trade, I should definitely go for a bull trade. But like I said, on a higher time frame, I'll always have the bias that okay, I'm approaching the resistance. Here I need to book my profits and look for a short opportunity whenever I get. So this is what I'm talking about. So this is the topic all about the time frames. Now the next topic that we are going to discuss is my favorite topic, which is Dow theory Okay, Dow theory I'm not going to explain in very much in detail because I have already posted a video in my YouTube channel. So people who are new, or if you wish to revisit that video, you can definitely do that. Maybe I'll put that link in the description. Apart from Dow theory, also what we are going to look at is identifying the swings. Okay, there is a separate video again for this topic in my channel. You can watch that. So I'm not going to cover the entire thing, but in a short method, we'll cover all these topics. And then the s- one more point which is similar to these things are the correction of the price. Okay, which we also call it as pullback or dip, anything. And again, in this topic, since these all these things are correlated with each other, so that's why I did not make it as different topics, but we are going to cover it all in one topic. So there is one concept that I'm going to use from ICT, which is known as inducement. So I've also, I think some of you have taken a course from me wherein I have taught you what is an inducement. So why that is important, we will definitely check that out uh, in this video and also in the upcoming videos wherein I will show you the charts. Okay, so let's quickly jump into Dow theory. So we all know that Charles Dow invented Dow theory, and he said that there are three trends that exist in the market. One is bullish, the other one is sideways, and the third one is bearish. So how do we identify a bullish trend? Is formation of a higher high and a higher low. Sideways is formation of similar highs and similar lows. And in a bearish trend, there is a formation of lower high and lower low. So let me just write here higher high, higher low formation, similar high and similar low, or we also call it as equal high and equal low, but it is not really that equal. There will be some, you know, upside or downside. And on a bearish trend, we see a formation of lower high and lower low. So this is the, uh, in short, this is what the Dow theory says. These are the three different price actions that we look at. Now we will talk about identifying the swings. So the swings helps us to understand whether the price is going to retrace or continue its trend. Uh, while the price forms its swings or the swing lows during an uptrend or a swing high during a downtrend, which we also call it as a retracement or a correction. So, why we are going to talk about swings is we need to know whether I am buying a call in this particular trend or whether I'm buying a put in this particular trend. Okay, so this we call it as pullback in an uptrend. So I think so when we say uptrend, that means the price is already in this kind of a formation. So we always say one thing, right? Trade the trend. So when we know that the price is an uptrend, it is always better we trade the uptrend, but there is no harm in trading the pullback until you know that where you should be taking an entry and where you should take an exit. So how do you identify a swing in terms of candles? Like I said, we have a separate video, but in short, to make you understand, so when a price is in an uptrend, uh, the candles will ensure that it is not breaking the previous candle low. Okay, so that means this is continuing its uptrend. So I'm just giving you an example. So in all these candles, if you watch, none of the candle breached the previous candle low. Okay, so that means my price is traveling like this. So when will I come to know that it is going to take a pullback? Is whenever you see any red candle. So say here there's a red candle, but again this candle has not breached the previous candle's low. Okay, so this is again a higher high candle. And when you see a candle which is breaking my last candle, so this is my last candle. Okay, so this low has been broken by this particular red candle. So this is where I know that okay, the price is now going to correct. How much it is going to correct is something which we will learn later. But right now, I at least know that, okay, this is a place which I'm not supposed to carry my call or even take a new entry. So that's what the swing identification of swings helps us to understand. So now the price may take a turn, it may correct a bit. So how will that look is some subsequent red candles, which is breaking each and every candle's low. Okay. And when will I come to know again that the pullback is stopped? Is again when I see a green candle which has broken the previous candle's high. Okay. So now I know that my swing or the pullback has come to an end. So now either the price will go until the same top for a formation of double top, or what will happen is the price will continue to break the previous swing high and the price will continue to move further. So I hope this identification of swing is clear. And similarly, for a downtrend, it's the same logic. The red candles will break every previous red candle's low, and whenever the last red candle's high is taken out, we know that uh, the downtrend or the swing that is formed for the downtrend has come to an end, and now the price is going to take a pullback. Okay, so this is all about the retracement or correction that uh, we're talking about in a swing formation. Okay, so now there is a specific. So we covered Dow theory, we covered identification of swings. Now the next topic is correction. So what is correction? Like I said, in an uptrend, so whenever the price is taking a pullback, so this is called as pullback or this is called as correction. So correction, there are of two types. One is price correction, which most of us know and we also love it. And the other one is time correction. So how is price correction and time correction different? Okay. So what Charles Dow had said is in a bullish trend, the price is forming a higher high and a higher low. Okay. So my higher high and higher low could be something like this, wherein the price is giving a decent amount of price correction for the new buyers to enter. So this is something which we all like. And there is another, kind of price action wherein the price is forming a high. It's not giving a decent dip, but instead of that dip, it is consolidating and again breaking the high, consolidating, breaking the high. Even on intraday time frames, you might notice that we tend to see a rally-based rally kind of a price action. So wherein you see a momentum, you see uh, a couple of indecision candles, and again the price continues to move higher. So this type of correction is called as time correction. Okay. So why there is these two type of correction? Obviously, you know, sometimes you like the big players, they don't want the retailers to enter at certain point. Okay. So instead of getting a price correction, they tend to bring in the time correction, because when the price is correcting without giving a decent dip, obviously we all are waiting for a good retracement. So at that point of time, we get fooled. So we don't prefer an entry here. And when suddenly the price runs above, then that is when we understand that, oh, I have missed this rally. Okay, so this definitely happens, and I'm sure most of us would have experienced this. So why this time correction? Like I said, uh, whenever you see a higher high, higher low formation, everybody knows that this is a bullish trend. So in a bullish trend, what are we expecting? Obviously, the next time when price gives a dip, I will enter my buy trade. This is what the plan is. So this is called as a decent correction, a price correction. Imagine you don't get this correction, and instead of this move, you tend to see something like this. So for a price to retrace, sometimes it happens within some time, especially in a smaller time frame. But imagine you're looking at a weekly time frame and you have seen a strong uptrend, and now you're looking for a decent amount of, say, about a 50% dip, so that you also enter into this trade and the price then breaks out. It forms a new swing high. But imagine, so for example, if on a weekly time frame the price has to give a correction or a decent amount of dip, this takes some time, right? It may take about 3 to 4 weeks. So what if we don't see the price coming down in this 3 to 4 weeks? What will the price do is, on a weekly chart, for the next 2 3 weeks or 3 4 weeks, it will consolidate on the higher side. Okay. So instead of giving a price correction, it is doing a time correction. And then the price gives a breakout of this and it continues to go higher. So this is how there is a difference of price correction and time correction. So I hope these things are clear. And so within this topic of swings, we must understand which form of correction the price is undergoing before its next move. So that if you're doing a higher time frame trade or a swing trade, it becomes easier for us to identify whether it's doing a price correction or a time correction, and based on that you take your next positional trade. So for now we are stopping this discussion of correction. Again, we will touch base on this topic when we discuss the Fibonacci. So another important price move with respect to the swing is the inducement. Okay, so that's the next topic. And like I said, it is correlated with the last three topics that we discussed: Dow theory and fiction of swings and the correction. So what is inducement as per ICT? So let me clear the board, and now we will just talk about inducement. So the name of the topic is inducement. So what is inducement? Some also call it as liquidity grab. Okay. So for example, in a uptrend, okay, now we have identified that the price is in an uptrend, and people here who are doing some swing trades, they're trying to shift their stop losses here. And at the same time, these are also some points wherein uh, the swing lows are some point wherein the buyers who have missed these trend, they are looking for an opportunity to buy. So again, that is going to be a price correction. So sometimes what happens is, uh, the price should ideally uh, again make a higher low and break the previous swing high. But instead of doing that, what the price is doing here is it is coming back again to the same swing. Okay, sometimes it may break and then come upside. So this particular uh, thing is called as inducement, wherein the price is forming an higher high and higher low, but suddenly the price is coming back to the previous low and sometimes even breaking it, and then it continues to move higher. So this particular thing is called as inducement. In short form, you can write IDM. So I hope this is clear. So why the price has to come down here? Like I said, uh, there are some buyers who are interested in buying after a price correction and who have already missed the rally. They're looking for a good opportunity to enter. And sometimes the price to move higher, on the higher side, there is no liquidity available. So when I say there is no liquidity available, that means what? There are no new buyers coming in. So when automatically there are no new buyers, it has to retrace, or the price has to go to a point wherein it can get some buyers. That's when it comes back to the previous swing and it creates liquidity, it creates demand, and then there are new people who are entering the trade there, and then the price moves higher. So this is the concept of inducement, or creating liquidity or creating demand. So this concept again is related to the swings. So whenever the price is forming a higher high, we all know the price continues to break the previous high. But what is important here is the momentum that it makes while breaking the previous swing high. So why am I talking about this is, uh, for example, this is my swing high and this is my correction that has happened. So looking at this particular momentum, I would prefer that the next time when it breaks the swing high, it again makes a very good momentum, gives a decent dip, continues the momentum. So this is the kind of price action that we expect, right? But do we see such type of price action all the time? The answer is no. Okay. And why are we discussing that is because of the inducement. So now the concept of inducement is clear. Like the price comes back to the previous swing and it creates a demand, and then the price moves higher. But the question here is, when will it come to the inducement level? Okay. So far we all understood inducement. I have explained this to a lot of people. Some some of you might have watched a lot of ICT videos, but I'm very sure that nobody would have discussed this with you, like when the price will come at an inducement level. Because if you randomly just sit down marking an inducement, like this is my inducement, I'm waiting for the price to come here to buy. It did not come, it maintained the higher low. Now I'm waiting for this point, the price again went up. Now I'm waiting at this point, and there would be some day you're waiting for the inducement level to get an opportunity to buy, and that is when the price has come to an end of that trend, and it is actually starting a new trend of a downtrend. I'm very sure that a lot of you have experienced this. This is an inducement trade failure. Okay, so that is not your fault. Now I'm here to clarify, or to make you better understand when the price will come for an inducement. Okay, for that, this discussion was important, like what is the momentum that it is creating after breaking the previous swing high. Okay, so now in this topic, next couple of minutes, you will understand when the price will come to take an inducement, or when the price will come to take a or to create a demand in a particular swing low. So in the next video, probably the next video that I record, I will show you live on the chart how the price comes to the inducement level. So let's understand that. So like I said, when the price is forming a swing high, swing low, every time we expect that the price should break the swing high with the momentum. Okay, so this is a strong uptrend. This is how the price should continue to move. But there would be some time where there is a swing high being created. Here we have seen a good momentum, a good breakout of this swing. Then the price, when it breaks the previous swing high, it is not making a significant high. I'm sure many of you would have seen this. Okay, so this is my swing high, a slight breakout, again a dip. This is my swing high, a slight breakout, again a dip. So what I call this kind of high is not a swing high but an impact high. So what is an impact high? It is breaking the previous swing high, but it is not giving a momentum on the upper side, but it is just making new highs for a namesake. So I have given it as a name as an impact high. In such cases, 100% the market will come and give a dip until our inducement level to create demand, and then the price will move higher. Okay, I will show this on the chart tomorrow. Many a times you will get this opportunity even during the intraday trades. So why is this happening? The same logic. So whenever it is trying to make a new high, it is not getting that enough buyers that the price moves with a momentum and makes a new high. So whenever that is not happening, automatically, if you want to move the price higher, you need buyers. And you know that I do not have enough buyers at this point. So where will I get the buyer? Obviously, at the last swing low, because this is a place wherein the new buyers will come and the existing buyers will defend. Okay, so the price comes to this inducement point, and then it creates demand, takes demand, and then the price moves higher. Is this clear? So these are the two topics that I wanted to cover: higher time frame to lower time frame analysis, Dow theory identification of swings, price correction and time correction, and the inducement. So make yourself clear until this topic, and the next video will come definitely tomorrow. That video, I will show you charts, whatever we discussed so far, and we will also discuss Fibonacci tomorrow, and then you will understand how we begin to take our trades. Okay, so thank you for watching. When I post this video, please like the video and definitely comment, and whatever doubts you have, put it on the comment section. If you have my mobile number, you can definitely text me, and we also have a Telegram channel. Let's make that active, and you can post your doubts there. We will have separate videos in clearing all your doubts too. Okay, so thank you for watching. Let's meet in another video. Until, take care, have a good time. Bye bye.